It's that time again where I'm going to be sharing an ISA portfolio update for my Trading 212 account. Remember, if you want a free share on Trading 212, then use my link in the description below. You only need to deposit £1 to get it. In this video, I'm going to talk about the change in all of my positions since my last update. And I'm going to show you exactly how much I'm up or down by in each of those positions. But then I'm going to do a deeper dive into Tesla and Palantir specifically, because those two positions have changed an awful lot since the last update. And I want to share some key reasons as to why that has happened. So first of all, let's cover all of the other positions excluding Palantir and Tesla, and then we'll move on to them. The first thing to point out is that my total portfolio value is currently £7,444.59. And this is an increase since last time. Last time the value was £6,555.49. So this is because I've had some gains in the portfolio, which we'll cover, but also I have added some new money to this as well. And you can see that the total amount that I've actually put in to this portfolio is £7,338.99, which means as of right now, I have made £105.60. That's if I withdraw it right now, which of course I'm not going to do. If we look at the performance across the last 3 months, because I only began this portfolio pretty recently, you can see that it's been steadily growing over that time, which, like I've just pointed out, is the accumulation of gains in the portfolio, but also new money coming in. So kicking us off with Alphabet, which is of course Google's parent company, you can see that right now I own 3.05 shares and I'm up by 15.39%. In the last update, I still had the same amount of shares, so I've not actually added to this at all, but I was only up by 7.15%. Since last month, this position has done pretty well. You can see that my average price, so my average purchase price, has come out at $100.20, which I'm pretty happy about. I don't care too much about sometimes buying when it's slightly higher, but obviously I want to buy when it's on offer as much as possible to bring my average price down, which of course then increases my average gains. You'll notice as I go through this that a lot of these positions are currently up by a larger percentage than they were last month. And that is because, again, a lot of these positions have had their earnings call since I last gave you an update, which makes a lot of noise, good or bad, and really does fluctuate the stock price. Taking a look at Amazon here, you can see that I currently own 7.1 shares and I'm up by 9.42%. In the last update, I only owned 6.49 shares. So I have indeed added more to Amazon since last time. And last time also I was only up by 2.08%. So again, this one has done really well since then. Average price, $99.86. And if we just scroll down here and we look at the history, you can see that I made a purchase on the 2nd of May and I got 0.61 shares with the fill price of $101.44. Moving on to Canadian Pacific Railway. I've just noticed actually that they've changed their name, Canadian Pacific Kansas City. There is a reason for that. We'll touch on that in just a second. But I now own 3.14 shares and that's exactly the same as last time because again, I've not added to this position. This position for me last time was actually in the red and it was down by just under 1%. Now you can see it's in the green and it's up by 3.62%. And I think there are some key reasons as to why this has done really well recently. One big one being the earnings report. They had a pretty good, strong earnings and they had no cut to dividends, which of course is great for dividend-based investors. Also, their merger with Kansas City Southern, which is why I imagine they've changed their name. Average price, $77.82. This is one I will probably add to, like with all my positions, to be honest. I'm just waiting for a time when it makes most sense because my investment strategy is to put my money where it's best spent at that time. And right now I see better opportunities in my portfolio. Moving on to Diageo. I have exactly the same amount of shares as I did last time, 8.57. Now last time this position was up by 5.84%, but now it's only up by 1.54. So it has dropped slightly since the last update I gave you guys. National Grid was up by 7.1%, now up by 11.32%. So it's doing really, really well. You can see that that equates to a £33 gain, but I own no more shares than last time. I'm still sitting at just under 30 shares. We're going to miss Palantir because we're coming back to them. So moving on to Segro, which if you didn't know is a REIT, a real estate investment trust. This is the smallest position in my entire portfolio, and I've not added any more to it since last time. Last time it was up by just under 6%, and now we're up by just under 9%. So that is another one that is contributing to my overall portfolio performance and gains. Missing out Tesla, we're coming back to that. So moving on to Unilever. Unilever was doing pretty well last time we looked. It was up by 5.28%. But it's doing even better now, up by 6.09%. They're doing really, really well, and they're actually able to increase their prices due to inflationary pressures and still sell an amazing volume of products. So that's really, really great to see. It shows they have a moat and loyal consumers. And then we have VHYL, which is currently the only ETF that I have in my portfolio. Last time it was doing a little bit better, up by 5.6, now only up by 3.16. This ETF has a big exposure to the financial sector, which as we all know has been very, very volatile recently, and is definitely playing an impact to the performance of this ETF overall. And again, I've not added any amount of shares here. Before I move on to Palantir and Tesla and do a more in-depth analysis of those companies' performance, this video is in collaboration with NordPass Business. NordPass is a solution for managing passwords and keeping your data secure. It can become such a problem when employees are writing their passwords down on notepads or obtaining login information from insecure channels. NordPass Business removes this need by providing a secure password manager to store sensitive data in one place. And it only takes seconds to give and revoke access to employees. NordPass also offers a custom password generator and health checker, which eliminates wasting your time trying to come up with a good password. It also scans all of your accounts 24/7 and will alert you in real time if there are any data breaches. Also, you can store unlimited payment information securely, and NordPass will autofill payment information on forms, saving time, allowing a focus on growing your business. I'm excited to bring you guys a 3-month trial of NordPass Business with no cost, using the link and code on the screen now, and I'll also leave that in the description. So you can experience the ease and security that NordPass offers and make your business more productive. So now on to Palantir. You can see that this is the second largest position in my entire portfolio, and I do plan to carry on adding to this one. Last time this position was up by 9.68%, so it was actually doing really, really well last time I recorded an update video, but now you can see it's up by 18%, which is absolutely crazy. And if I had filmed this video just a few days ago, this number would have been even higher. I also owned 108.4 shares of Palantir last time, and I now own 142 shares this time. So we'll get onto that in just a minute. But I want to point out why they have done so well in the last month or so. So looking at their 1 month performance, you can see a massive surge happening right here. And this doesn't happen really in stocks unless there's something going on in the wider market that is causing this to happen, which is causing more investors to buy this stock, therefore increasing the supply versus demand, therefore pushing up the stock price. And this has happened with Palantir because of their earnings call that happened very, very recently. They had an absolutely fantastic earnings call, which broke all of the estimations that were put on this company. And honestly, I think that now people are starting to view this company very, very differently than they were perhaps a month or so ago. So since their great earnings report, this company has gone up by nearly 30% in stock price. And that happened in just 5 days or something like that. So that has really, really increased my personal return in this position. And you can now see that it's actually the best performing stock across all of my portfolio. In the earnings call, Palantir reported revenues coming out at $525.2 million, which actually really beat the stock market predictions of $505 million. So the company's year-on-year revenue growth is so impressive, coming out at about 17.7%. And amongst the different revenue streams that they had, their government revenue in particular was a significant contributor to this growth, sitting at about 20% year over year. But I think moving forward, they are going to continue to push their commercial area of the business, specifically with their product Foundry. A key problem that a lot of potential and investors actually had with Palantir was their stock-based compensation. But another thing that I want to point out was that this was the 7th consecutive quarter that their stock-based compensation has declined, which I think as an investor into this company is a really great and promising sign. I've said this in a previous video before, but I think AI is the next big thing. It's the next big breakthrough. And we're already seeing so many companies push to increase their AI. And I think Palantir specifically are positioned in a way to become one of the winners here. They are going to really increase their revenue by exploiting AI. We're already seeing it. And obviously this is not financial advice. This is just my opinion. But there is such a large TAM, a total addressable market. And right now, Palantir have only got such a small amount of that. But I think they are positioned to capitalize on this and really grab hold of the opportunity that is out there in the total addressable market. And I think others are beginning to think like this too after all of the new releases that we've seen from Palantir, all of the news and the earnings report. Alex Karp has said himself that Palantir is well positioned amid booming interest in artificial intelligence tools. And hey, that's exactly what Palantir can offer governments, big organizations and companies all around the world. Another thing that I really like about this company and another reason why I invest into them is that Palantir are a high margin business. And I think a lot of other investors' eyes are opening to this fact as well. They are operating at a 36% margin for cash from operations right now, which is very impressive. We also know that Palantir is now profitable on a GAAP basis, and they are looking to push that through each of the quarters coming up. This is looking promising for them to be included in the S&P 500. You have to show 4 consecutive quarters of GAAP profitability to be included, and they are currently sitting at 2. Now, although the inclusion in the S&P 500 will not change Palantir on a fundamental basis, what it will do is it will increase stock price. And this is because the company will be getting more institutional money and ownership. And aside from this, there has been so much more news and releases since my last update. We have seen the new AIP, which I spoke about in depth in my last Invest With Me video, so check that out if you're interested. But basically I said that this new AIP from Palantir will, I think, make more companies actually want to purchase Foundry in the future. Now, my average price here is currently sitting at $7.97, which has increased a little bit since last time, but that is because, as my Patreon members will already know, I did buy some more on the 12th of May, which was a little bit more expensive than I'm used to paying just because of that increase in price. So the fill order here was $9.79. But also I purchased 32.5 shares on the 25th of April as well, which came out to be £205 worth. Now we're going to look at Tesla, which is of course my largest position in this portfolio and one that I'm very bullish on for the long term. In the last update, this position was up by 0.76%, which is nothing to write home about, but it was in the green. Currently, you can see it's in the red. It's my only position in red right now. And it's down by nearly 7%, which equates to about a £255.50 loss if I were to sell it right now, which I'm not going to do. So why has it fallen by so much since the last update? Well, I think Tesla in general is a very volatile stock, and it is really impacted by market noise, which there is a lot of with this company. And as an investor into Tesla, you've really got to have a hard stomach because there's always something happening. So one reason that's impacted the stock price is the recent Elon Musk announcement of the new Twitter CEO. So when Elon Musk actually announced the new CEO, Tesla's stock price jumped by 2.3%. And I guess this is because people are thinking, okay, well, if he's not the CEO of Twitter, he can spend more time and more energy on Tesla, which is good for Tesla investors. But this position is still down since the last update. So why is that happening? I'll get onto that in just a second, but there's also been really exciting news in terms of Tesla potentially owning their own lithium refinery, which will be absolutely massive for them as a company. There are no other automakers right now that actually refine its own lithium. So if they are able to do this, it will drastically improve their supply chain. They will probably have no more supply chain issues when it comes to lithium in particular, which then will mean that their costs are better, and it will mean that Tesla becomes more self-reliant. And all of this will mean that they can push further to meeting their EV sale targets. The main reason, in my opinion, why Tesla stock price has really fallen recently is because of the earnings report that came out, and it was a mixed earnings call. There were some really good points and some not so great points that panicked a lot of investors. In my opinion, personally, I don't think that the bad points warranted such drastic moves by some people. I think there was a reason that a lot of those things were happening, and a lot of them came down to short-term losses for long-term gains. But if you want to see me point out some really good points from the earnings call and actually tell you why I'm not worried about some of the less good points, then watch my latest Invest With Me video. I'll try and link it on the screen now because I dive much deeper into it in that video. But I think the stock price fell and a lot of investors sold out of their Tesla holding after the company reported more than a 20% drop in both EPS and net income compared with the year ago quarter. And a lot of people are really concerned about the ongoing price cuts of the Tesla vehicles. Personally, that's not something I'm really concerned about. But it did cause a lot of people to actually lose conviction in this position. So you can see that my average price is $178.74 shares, which I'm quite proud of. I think that average price for owning 25 shares is pretty decent. And if we again just look at the history here, you can see that on the 12th of May, I purchased 0.37 shares, 25th 2.3, 20th 2.5. So those free buy orders here are the ones I've made since the last update. Remember, if you want a free month free trial of NordPass Business, then use the link and the code in the description below. Thank you so much for watching, and I'll see you in the next video.